As WEN begins a long-term recovery, there is a failed bearish reversal in the general outline of a failed head and shoulders formation. Then there is a rapid bullish acceleration from a large-scale ascending triangle. The ascending triangle pattern has some variability. Some swing points have increased volatility, resulting in larger candles. This is why it is possible to have varied outlines, such as in this case. The bullish break is extra aggressive with general 3 methods rising price action, incorporating a small gap up. 2017 begins with the formation of a flat, broad, and horizontal head and shoulders variant. It fails with the characteristic incline of the right shoulder portion that provides an uptrend line to reference. Then a compact head and shoulders completes successfully later in the year. Compared to the ascending triangle, the head and shoulders patterns are generally more compact and easily identifiable outlines on the chart. After the steeper uptrend line is crossed, there is normal, neutral to bearish price action that does produce some small drops within a flat top range. However, bearish volume decreases significantly after May, and is a key factor in the larger uptrend resuming with the added benefit of increased bullish volume. When there is a broad market correction in 2020, the old ranges and trend lines do mark support ranges. However, they are of course much less precise during such major volatility.